Hi, this is Jordan Moorhead, and this is the Austin Real Estate Investing Podcast. Today we have Ryan Tanel on, and Ryan is a multifamily syndicator helping his investors get great returns passively without doing any of the work. Hey, Ryan, how are you?
Jordan, it's a pleasure to be on. Happy to chat with you today.
Yeah, thank you so much for coming on. I know we've skied together. I've been on your podcast. I know a lot about you, and I was just interested in getting you on our podcast so all of our guests could learn about you too.
Definitely. You're a phenomenal skier. I was keeping up with you over there. So, yeah, such a pleasure.
Yeah, I try. We were on in Vermont too, so it's it was a little fast with the ice we had that time.
hmm
So,
Definitely, definitely.
Ryan, most important question we ask here on the podcast. What's your favorite restaurant in Austin?
I like places that have a lot of space and that they have good service. And I go to Matt's El Rancho out on
Mm,
South Lamar. That's just a great place where it never disappoints. Whenever people come in town, I take them over there. It's always
mm.
been a good time.
Yeah, I love Matt's too. It seems to always have a good crowd, but they deal really well with the crowd and they have great food.
Yeah, yeah. You don't really mind if you're waiting. You go up to the bar, they've got margaritas. Fajitas are always really good. So, good environment.
Yeah, great food and like you said, great service. Love it. So Ryan, can you tell us really who are you and how did you get involved with real estate investing, or how are you currently involved with real estate investing?
Yeah, sure. So I'm very transparent. I'm 34 right now. I've been doing real estate about 10 years. Originally, I went to University of Texas for communications, and I did video editing and film production. And so I moved out to LA after college and worked for 3 years doing green screen effects for music videos and movies, and just realized that was a very difficult career path, as far as the work that I was doing and if I ever wanted to make a fair amount of money or retire. So I started reading books on investing, and I read Rich Dad Poor Dad, and it just showed me a new way to think about how you can acquire money and acquire freedom. And real estate was a great path. There's a lot of good paths out there, but real estate just made sense to me. It's a proven business model, and I could jump into it. So I moved back to Austin and I got a job doing mortgage lending. And I did that for 7 years. We helped 600 families get financing for their homes. I learned a lot about how deals work and how the money side of real estate works. I bought my own duplex as my first property as a house hack, lived in one side, rented out the other, made some cash flow along the way, moved out of that the next year and bought another single family, rented out the other rooms to roommates, and just kind of kept buying houses every year to either flip or keep as long terms. And did that, like I said, for 7 years until 2021, where I left the mortgage business and I started doing multifamily syndications full time with investor capital because I'd seen how positive and beneficial the investment side of real estate can work. And I had been working in the business long enough that I knew how it worked and how deals worked. So being able to help others that wanted to get into the business, maybe that were doctors, attorneys, realtors, mortgage lenders, just busy professionals and entrepreneurs who want to keep doing what they're doing, but just didn't have the time or energy to figure out real estate, but knew they wanted to be diversified into it, allow them to come and join our deals along with me and help grow their wealth through that. So far, we have 7 apartment complexes. We're on 255 units, all in Central Texas here, between Dallas and San Antonio. I'm, here in Austin now, and so, things that I can drive to and oversee and just, work really hard to make sure we get the best returns possible.
Love that. And there's a lot I want to talk about there too. But the first thing is house hacking. So you got started house hacking. You did that a couple times. I think that's so interesting because so many people get started house hacking and they have bigger goals starting. They just use it as kind of a starting point for them. For you, was it a starting point or were you just saying, hey, this is a good idea?
Yeah, absolutely. I mean, when I read Rich Dad Poor Dad, before I was even in real estate at all, I just knew I wanted to own a ton of buildings and
Yeah.
I wanted to, it's real estate seemed like the kind of thing that if you just had enough of it, you could stop and then you would make 100K, 200K a year passively just from rental checks coming in. And so that was always the goal is like just get enough so that I can not have to work and I just have mailbox money coming in. So the duplex was the first starting point. Well, really, mortgage learning the business was the first starting point, and that was the first property to say, okay, let's prove the concept. Let's get some trickle of cash flow coming in, and
Mhm.
then I'll just keep building and building from there.
Awesome. So when did you start in mortgage again?
That was 2013 when I got my license and got started.
Okay. And then your first house hack was when?
Yeah, I had to pay off my student loans and then I
Yeah.
had to save up a little bit of money and I took money out of my 401k. They let you do a loan. I didn't have to take it out, but I loaned against my
Yeah.
401k. I put $8,000 down on a duplex in Hutto, just north of Austin, and I got the seller to pay all the closing costs. So that was 2016. I bought it for
Nice.
213,000 at the time and then sold it I want to say what, 2 years ago for 465,000.
Dude, your story is so similar to mine. I did almost the same exact thing.
Hmm.
I started in 2016, bought my first house hack. Did also took a loan against my IRA. I was self-employed, so I didn't have a 401k. I had an IRA, had to take a loan against that, put down like 6,700 bucks to buy my
Hmm.
first duplex for 183,000. And then I sold it 2.5 years later for 327. So you did a
Yeah.
little better than I did as far as because
Hutto
you
was a good
were
market.
yeah, yeah, no, I think we both not lucked out. We both had good timing, but at the same time, I don't know about you. When I bought my first duplex in 2016, I felt like I overpaid. I felt like it was going to be a mediocre deal and not anything great.
Yeah, I want to say I'd been looking, I probably went through 50 to 60 properties,
Me
between seeing
too.
them on the MLS and, there were a ton of opportunities, but some were just way too much work. And I didn't want a huge rehab project. So,
hmm
I mean, it was on the MLS where I found it. So like it was definitely market price. I
hmm
think it was an okay deal because it hit the 1% rule at the time. But yeah, I was just guessing on as far as, other than the 1% rule. I didn't know if it was going to do well long term or not. I was just going to figure it out.
Yeah, no, I think that's so important. You just got into it. You took action and got into it. I think mine was pretty similar. It was a little better than 1% rule even, but I
Hmm.
didn't know it was gonna be worth 330 in 2 years.
Yeah.
But
Yeah.
you can't ever know that's gonna happen. There's a lot you can predict, and you and I both know that as far as the ARV and projecting returns. There's a lot you can predict, but you absolutely won't get anything if you don't get into the market. And I
Hmm.
think that's what you did there. You just got into the market. You said, "Hey, I got to get into something." And
Yeah.
it worked out really well, and I'm sure that probably helped you get to the next thing.
Yeah. And I think, I'm a really conservative guy and I always keep a lot of funds available for reserves and I always want to keep my expenses low. And I think really with real estate, as long as you're in the game for a long time, it's going to do well. The times
Yep.
that people have lost money in real estate is when they got in was hot and then they sold quickly when it was really slow and
hmm
prices had dropped temporarily. But over time, they always come back. And so that's the thing is if you just have cash flow to keep you afloat and you don't, get yourself too leveraged or just deplete all your reserves, you'll be able to weather a storm and just don't sell when it's a bad time and you'll end up better than you started.
Yeah. Before you and I were in GoBundance, I know Robert Kiyosaki came and spoke to the crowd. And so I can't remember who told me this. Somebody told me that they were talking to him. And they said, "Well, you've lost so much money. You've got all these houses in Arizona." And he said, "I haven't lost anything. I'm not
Hmm.
going to sell." He said, "The
Hmm.
values of them are down.
Hmm.
I haven't lost any money because I haven't sold them." And I
Hmm.
think it's so important to take that perspective. Unrealized gains or unrealized losses are unrealized until you realize them. So you sell the property and you get a gain or you get a loss. So I think we all think it's fun to look at our net worth and say, "Oh, I just gained this much net worth because the property went up that much." Or we like
Hmm.
to say, "Oh, I lost money because the value of something went down." But it doesn't matter unless you realize it.
Yeah.
So
Yeah. Very true. Very true.
like you said, have good reserves, have the right debt structure and you're going to be okay.
Hmm. Yeah, absolutely. Very important.
So beyond being here in Central Texas, why do you choose to invest in Texas, Ryan?
So, I was born in Dallas and then I've lived in Austin for like 14 years now. So I know
Nice.
it really well, right?
hmm
So
Yeah.
I would say that's the most important part is you just got to be as much of an expert in your local market as you can. And, if I can drive to a part of town, like someone from California, New York that's investing over here is not going to see like how difficult it is or how the homeless population is affecting that area or how this new development is coming up down the street. Maybe they'll know these things, but it's so hard to do that, from out of state. regardless of what the numbers say. Plus, I have connections here. So I hear stories of, hey, this person's got a deal, or this person has something to sell, or hey, here's a vendor that can help you out. You just have way more resources at your disposal. So just really being where you're working is the best thing. And I've just gotten lucky, right? Because I grew up in Texas. It wasn't really my choice. But, you know, on a positive note, I moved to LA and then moved back to Austin from LA because at the time Austin was cheaper, but everybody was moving here. And now when I look at population demographics, I mean, Austin's or Texas in general still has, 3, 4, 5% population increase per year. New jobs are coming in. They're building the Samsung plant over there in Taylor. Tesla's got their gigafactory here. That's going to spur off a lot of all smaller businesses and vendors. So it's going to keep growing. There's no income taxes for the state here. The state has a lot of business incentives to get businesses here outside of, New York and California, where taxation is really high and people are leaving. And Austin just as a city is good weather, so I can kind of see the draw of why people want to come here and come to the lake. So from a macro perspective, you want to be investing in a place that's growing, because that's likely to lead to appreciation. And you want to come to a place where there's business development, because again, that'll lead to appreciation. But other than those two big macro things, just enjoy where you work and be an expert in your area.
Yeah, I think that's so important. And like you said, you are lucky you grew up in Texas. You live here, you love it here. And it happens to be an amazing area to be economically. I was listening to Jamie Dimon earlier on some YouTube video, and he was saying, hey, New York's got to get it together because we're moving a lot of our operations to Plano. They're getting
Hmm.
out of New York, they're going to Plano. Like you said, the Tesla came to Austin. Now Samsung's doing their next big factory outside Austin. Yeah, the weather's great. Yeah, there's no income tax, but it's great for business growth. Another thing it's great for is landlord laws. So
Oh
you're
yeah, yeah.
you're investing in Texas, and we've got great landlord laws where there's some other areas where they have rent control and they've got all this other stuff. We just don't need to worry about that in Texas.
Yeah, I hear stories about California squatters' rights where it takes people like 6 months. And like, if you're a landlord, you have a vacant property and a squatter moves in, you can't kick them out. Like, they have rights now because they've
Yeah.
just decided to move into your property, which is crazy to me. So, yeah.
And, and because of the rent control laws in somewhere like LA, if somebody's way below market, you can't non-renew their lease. You might have to
Hmm.
pay them 50, $60,000 to get out of your unit so you
Hmm.
can raise that to market, which is
Hmm.
just nuts. And we don't have to deal with any of that here in Texas, which is great.
That's bonkers. Yeah.
So Ryan, how did you make the jump from, and you bought a duplex, you bought a single family, you're doing some of the smaller residential investments, and now you're syndicating over 250 units. How did you make that transition?
Yeah, so there were two shifts that had to happen. The first was just in my headspace, and then the next was like, okay, well, tactically, how do I go about it? So the
Mhm.
headspace, I would say, is the bigger one because, for the 6 or 7 years I was doing mortgage loans, I thought the only way that people acquired real estate was they earned as much money as they could and they used that money to buy real estate. And then hopefully they managed it and could buy more real estate. I didn't really know there was any other way. And so I just talked to some friends and I learned through some of these investor groups that, well, you could raise capital or you could leverage opportunities or you could have business partners. And, I knew I wanted to get into multifamily investing at some point, and I said, I think at that point I had 5 units to my name, and I said, okay, well, let me at least figure out what the next step of this is. Maybe that means selling all these to buy one multi-unit property, and maybe that'll be a little easier. So I started digging around on YouTube and Google and Bigger Pockets and found out that, like, well, not only is it possible, but it's almost easier because there's a lot of these coaching and education groups that'll teach you how to partner with people and raise capital for your deals, because there's a lot of people that want to be in real estate that are not real estate people, but they have capital that they want to contribute to these projects.
Mhm.
And so I said, okay, well, I have the experience and I've had success in this space and I know enough about what I'm doing. I'm not an expert at that point, but I was like, I know enough about what I'm doing that I say, hey, look, here's a formula. I've done it successfully 5 times. Let's do it a sixth time. Who, just wants to join me. And in that way, it frees me up and gives me leverage from not having to use all of my own capital. And it helps other people come along for the deal. And then you can have the velocity of deals. So that was just the mindset shift of, this is even possible. And so from there, I took David Tupin's course with Real Estate Lab. He's here in
Mhm.
Austin, originally from Michigan. He's building a software now to help people learn how to underwrite deals and analyze them all across the US, and buy multifamily real estate pretty effectively. I did his course was for a year. I also joined Wheelbarrow Profits, which is with Jake and
Oh,
Gino.
Jake and Gino, yeah.
Yeah. Yeah, they're based out of Knoxville. They were really they're $20,000 to join that program, which in my head I was like, well, I could pay $20,000 or I could just use that as a down payment on a property, and just kind of learn from on the job. And I was trying to figure out, well, which one's going to be a better use of my knowledge. And at the end of the day, I figured the partnerships and the network that's going to come from Jake and Gino and the speed at which I'm going to be able to get into these deals is going to be faster than me trying to learn it all on my own. And I
Mhm.
might even make mistakes that will cost me more than $20,000 that I might have been able to avoid if I, had some mentors that I could go with. And there's a lot of people out there that have coaching programs. There's Rod Khalif, there's Michael Blanc, there's Think Multifamily. There's a ton of these guys out there that, they all have coaching programs that are 20 to 30K. Jake and Gino, I thought was good because they had family values, they had good customer
Mhm.
service, and I could just tell that they cared. And they also paired you up with two coaches. So I would be able to get on their calendar, for an hour a week and say, here's the deals I looked at, here's what I'm working on, give me feedback, answer my questions. Whereas some of these other groups, they put you in a Facebook community, you post a, make a post on the wall, who knows who the feedback is? You can't really build a relationship quickly with these national groups. It's hard to form partnerships. Like if you have coaches, they can say, call this guy, call this guy, call this guy. These will be your partners. This will help you get a deal done. So even though I had joined, I had been studying multifamily for a year, doing mortgage loans at the same time, and it was so difficult. I was doing mortgage 10 hours a day and trying to learn multifamily for like 2 hours, and it was either 2 hours in the morning or 2 hours at night. So I either suffered my mortgage job to learn multifamily or
Uh,
multifamily suffered because I was actually doing my day job.
yeah.
So I ended up just deciding to take the plunge and quit because I saw if you do one of these underwrites as a general partner and you buy, there's a video that explains, hey, here's a $6 million deal, here's a waterfall structure, here's all the underwriting. As a general partner, you can make $300,000-400,000 on this one deal if you operate it successfully. And this is just kind of like a standard deal. And I said, okay, well, I started talking around how many people are doing these deals, one deal a year, more than one deal a year. And it turns out a lot of these guys have had above average deals. Granted, this was, 2020, 21, 22 when real estate was really going up.
Yeah.
Everybody was bragging about how much money they were making. And I said, okay, I think I can handle that if, even if it means, and I had saved up like $200,000 liquid at that
Oh,
point, and I
wow.
had, 5 houses to my name with some equity. So I was like, okay, that's enough runway that I feel comfortable leaving my job, going all in on this multifamily thing to figure it out and, buy the coaching programs, invest in the down payments, and like really give it a go all in. So tactically, that's what I ended up doing. It took me, after I quit my job, it took me 10 months to actually get a deal under contract.
Wow.
I mean, we made a lot of offers. I was probably making, three, four, five offers a week. I was touring 2, 3 deals a week with brokers. I was writing letters. I got Reonomy. I got CoStar. I sent out, I don't know, a couple thousand letters directly to owners in the Austin and kind of surrounding areas to try to,
Mhm.
I was cold calling them. I was having conversations with them. I was doing anything. I was just putting stuff on the wall and seeing what stuck. And then finally, I got a couple partnerships through Jake and Gino that got me started. And even though it took me, 10 months to get something under contract, I was building relationships with a lot of other people along the way. And so even
Mhm.
though this one deal was the first one to hit, there were a lot of others, that following year I got 4 more deals, all at once because, and granted, varying degrees of partnership. One I'm like
Mhm.
an 8% general partner, like I don't know, that's like 0.5% of total ownership, and then one I think the largest one as at that year I was like a 40% general partner. It was like 17 or 18% total. So, yeah, I put all of these together because I was making a lot of relationships with different people and they all kind of came to fruition at the same time. So, yes, each one of these deals I did get lucky, but I was putting in a lot of work in a lot of places. So at some point something was bound to hit.
Yeah, that 10 months, that was kind of my experience getting into commercial real estate too. When the smaller stuff, it can take 6 months. And I think it's so hard for a lot of people to hear that is they just want it now. We're so used to the order on Amazon, it's here in a few hours. It's nuts. You click a button and something shows up.
Hmm.
We're so used to that instant
Yeah.
gratification. It's easy to hear, oh, 6 months, 10 months, I can do that. But in all reality, I know you have this experience of it took 10 months. How did you feel that 5 or 6 month mark? Were you ever getting frustrated or
Yeah.
anything?
Oh my gosh.
Yeah.
I was so sorry. It was the darkest part of my life, I'd say. I was like, I'm a successful guy. Like I'm in shape. Like I'm good at talking to people. I had a successful career doing mortgage. I was making
Yeah.
the year that I quit, I made like $290,000 doing mortgage
Wow.
loans. And so
Mhm.
like, it stung. Every month that went by, I was like, it's like what, 30, 10, 25K check that I just didn't do this month that I could have.
Mhm.
And yeah, I remember like month 9 and 10, it was over the holidays, and I was like beside myself being like, man, I know this is gonna work. I gotta have faith in myself. My bank account's going down every single month faster than it normally does because you're putting extra resources to try to build a business.
Yeah,
So yeah, it
Reonomy
was
and
mhm.
sorry, CoStar are not cheap for everybody listening. Well, Reonomy is what, like 350 a month?
Yeah, three, that sounds right. 350. CoStar, I think, was like 1,000 a month that I was paying at the
A
time. So
lot,
I did
yeah.
CoStar first. I did Reonomy after as the cheaper alternative.
Mhm.
Um, but yeah, it was, I would say, very difficult, very lonely. It was really, really hard. And even after I got that first deal closed, I think my acquisition fee on that first deal was like $11,000. And then I didn't make any extra money until our first distribution was like 6 months later when I got, I don't know, like a $3,000 check for the asset management during that time. It was
Yeah.
tiny. Even still, it's like tiny. Like I've had to float. These deals are like on 5-year holds. And so
Mhm.
it's a really cash sucking business until you finally sell. So I had
Mhm.
to sell all 5 of my single family units because I needed the money to be a limited partner and have skin in the game in all the multifamily deals I do to say I'm an equal partner. If, these deals don't do well, I'm also losing money,
Yeah.
but I also want to get paid if everybody else does well. So I'm putting my own money in here too. But then operating a business takes a lot of cash. I've hired an executive assistant, that takes cash to do. And have my first 12 unit that I had bought in November of 22. We finished all the renovations within a year. We got it stabilized. Now we've got it, fully rented out. We're about to get the final lease signed, only 100% occupied and making good money. Going to sign the listing agreement to sell that. We bought that one for 850,000. We put about 300,000 of renovations into it. They're telling me they're going to sell it for hopefully 1.7. Hopefully we sell it for a little more. We'll
Dang.
see what
Yeah.
happens. But that's a good chunk of change, and
Mhm.
that's a good amount of profit, and that's going to allow me to keep going for another 2, 3 years so that and other than that, I mean, the cash flows on the rest of these deals are not really paying out anything. These are kind of like just long-term flips that we're doing.
Mhm.
And so we sell this 112 unit and then I'll say, okay, well, we've got another deal that might sell in 1 or 2 years, and then we'll have a few more that'll sell after that. And that just kind of keeps the fire burning so that you can constantly have a conveyor belt of deals kind of coming on and off at the same time.
Yeah. I think it's so many people, unless you know people in the industry and actually know them well, it's hard to know that it actually happens. When you're a full-time real estate investor, especially in the commercial space, you're putting a lot of time and effort with no promise to get paid.
Hmm.
You're just doing it on faith because it does work. Real estate does pay. People have to live somewhere. I think it's the biggest industry in the United States by dollar volume,
Hmm. Hmm.
just real estate in general. it it will work, but you really have to have that faith. And when you're coming up around month 4 and 5 and 6 and it's not happening, you just have to stay positive and stay motivated and know that if you keep taking those actions every day and touring properties every week and making offers, and it will
Hmm.
eventually happen for you too. And
Yeah.
like you
Well,
said,
and
it
yeah,
builds, and over time you got 4 right after that
yeah.
first year.
Yeah. You just keep, putting down seeds and you'll kind of see where things grow. But I mean, even on, we're raising money for a deal we're doing right now. I think it's another great deal. But I wrote a $30,000 earnest money check and I think
Mm.
we'll close the deal, but like that's not guaranteed. I could just
Hmm.
lose 30 grand just like that if it doesn't. So we'll see. That's the risk we take on the investing side.
Have you ever seen the pic? I'm sure you have the picture of the guy that's picking through the dirt with the pickaxe, and right
Hmm.
on the other side is diamonds, and he's given
Hmm.
up inches
Hmm.
from hitting
Hmm.
the payload. I think that's real estate investing for you right there. It's such a lot of effort over such a long period of time. And the consistency and the persistency is so important, and it's so easy to give up right before you're successful.
Yeah, and it's hard to even know when you're successful because you just never know when something is going to come. You know, it could
Hmm.
be even longer. It could be right around the corner. So, yeah, it's a difficult game, but kind of just like everything, right? Whatever your business is, if you just stick to it and you're patient, um, it'll work. I mean, as long as it's a market product market fit idea. Real estate people need a place to live. So as long as you got
Hmm.
something that people want, you just stick to it long enough, you'll get good enough at it.
Yeah, that's hard. Easier said than done. Ryan, so you've done quite a few deals at this point. What's the biggest mistake you've ever made investing in real estate?
So, there's some tactical things that um, I would say one of the smaller mistakes we made is like when we took over our first 32 unit and then we took over another um, you know, we've got another 20 unit basically. We go in there and our job is to make money, right? So we renovate these units and then we raise the rents. Well, in these communities, a lot of the times people are friends and then they talk. And so if you come in and you raise the rents, like even on just one person and you don't make it public and you don't tell everybody else, it gets around right away. And we had
Hmm.
like six people just immediately stop paying rent, leave, or we would need to evict them. And so that's like way more vacancy than we had anticipated. And granted,
Hmm.
it just means we had to go quicker to solve the problem, get the units renovated, constructed, and then fill them, but it creates a big gap where you're losing a few $1,000s a month with unexpected vacancy. So I would say going in, at least on the tactical side of real estate, is doing everything you can to have customer service. And because it's a good customer service business. So now the new business plan is we'll go in and for the first 3 months, we don't even talk about the rents. We just say we
Hmm.
are here to make things better. The outside exterior is going to be immaculate. We're going to provide amazing customer service. You probably have outstanding work orders because we bought a property that needs maintenance and problems that we need to fix.
Mm.
So tell us what your backlog is. We're going to fix it right away. We're not even going to worry about raising the rents. And then after we fixed everybody's issues and everybody's feeling like we're the good guys, then we're going to upgrade the common areas. Then we're going to make those nicer because everybody can see them. And everyone says, okay, these guys really are making the place nice. And then eventually around that 4, 5, 6 month mark, they'll kind of know, hey, if all these improvements are coming, probably rent increases are coming.
Hmm.
Um, but if we don't start with that and then we have a renovated product afterwards and we can say, hey, this one just came up, see how nice it looks. You can move into here. We'll even give you a discount if you're an existing resident to move into the new unit so we can renovate your old one. I think just having that customer service approach, fixing the problem first instead of looking for the money first is a good way to go tactically. But I'd say that's even that is like a small problem. The bigger problem is making sure that you work with good partners. And that's so hard to do because if you're just starting out, you don't know who's a good partner or who's a bad partner. And you don't know who to evaluate, how to evaluate what a good partner and a bad partner is. And even if you do have somebody that is a good partner, like you got to figure out a way to work together well, or one partner may become really busy and you got to step in and take workload off of their shoulders. Or maybe you have uncompatible strengths, or this person just stops carrying their weight. So those have happened to me on deals, and I luckily because I'm full time, I have the free time to just work harder and do whatever needs to get done to make the deal successful. um, and I've also gotten lucky because I've had partners that I haven't screened that have turned out to be like phenomenal partners that I'm like super happy about and our paths have crossed. So I don't know what the lesson here is. I mean, choosing your partners is very important. Screening them best you can is very important. um, Sometimes you just got to take a little bit of a risk and go with a partner just to kind of see how it is. I mean, I think if you go more with like a mentor, if you're starting out with somebody that has a proven track record and you just sign up to learn from them first and learn all of their systems and be a part of their team, that might be a better way to start than trying to just do it all on your own, or try to be equal partners with somebody that has equal experience to you and has maybe a good sales pitch, but maybe not necessarily a track record. Um, but nowadays, I mean, my screening process is because I've underwritten a ton of these deals and I've sent out a lot of investor letters, and some of them are good and some of them are bad. And transparency is extremely important to me, and it should be to every investor and to every partner. And so I say, if you do want to partner with us on deals, I need to, run a background and credit check on who you are. I need to know what your personal financial statement looks like to see that you are a good steward of your own money. And I need to know the deals that you've done, and I need to know their performance over the past, 12 to 24 months, and just, open everything up and let me take a look. And I'm transparent as well. I mean, when I meet with investors, I show them all of our previous investor letters, how the actual returns compare to what we budgeted on the pro forma, and
Mhm.
tell them, real estate's not easy. There will be problems. I will tell you when
Oh
they
yeah.
come up. But you know what you're getting into, which is more than what I can say. I've heard so many stories of people that heard a good sales pitch from somebody that had a lot of hype, and then their money just got lost, and they never heard from the guy again. It's unfortunate, and crazy how often that happens. But my information is very public, so it's easy to find me.
Awesome. Yeah, no, I really like what you said there too about, demonstrating value before raising rent. I think it's easy to say, oh, here are the market rents, we should just raise them up there. But you found out you just have such a better time when you demonstrate the value by increasing the aesthetics or the operations of a property. And then you raise rent because people say, okay, I can get on board with paying extra for that. I can see all the changes that are being made. This is a much better place to live. I see the value in the property.
Hmm.
And then of course, picking partners carefully. Whether it's you're investing in another person's deal, they're the general partner, you're the limited partner. I think that's so important because it's so easy to say, oh, this is a great guy. Like you said, they've got a great sales pitch or a great social media presence. But what do I really know about them by that? Not much. They're not going to show me the bad on social media. They're not going to show me
Hmm.
the things that I really want to know. And especially when you're putting money to work, it's so important to get to know somebody and to have some sort of screening process other than just, oh, they seem like a good guy. I've gotten together with them once or twice and I know everything about them now.
Well, and I know even, just between you and I mean, there's an operator that I was considering partnering with, and part of my screening process was talking to you about him, and you gave me some really good feedback that helped. So
Oh yeah.
having people in your network, say, hey, who do I know that knows this person better than me that can actually give me good feedback and referrals? So yeah, it's super important.
Yeah. Checking references, I guess, is the
Yeah.
goal, the point there. Awesome. Ryan, if you had to start over today, is there anything you'd do differently? So I know you got into real estate as a mortgage loan officer. You did some smaller deals first. Now you're doing the syndications. Would you do it any differently?
Mhm. Yeah, definitely. So when I read Rich Dad Poor Dad, they said, buy a house, buy something small that you can kind of figure out yourself, like operate it and learn all the details. And I'm happy that I did that. But now that I've been doing it long enough, it's just as hard to do the big deals as it is to do the small ones. So I really wish I would have just started off doing the biggest possible deals, like, and be on like the final vision that I had for myself, instead of feeling like I have to build this staircase and then climb up one at a time. What I would have done is I would have surveyed everything that's out there and said, okay, this is exactly where I want to be. If I want to own a ton of buildings, I need to see who already owns a ton of buildings. And I want to get in on the ground floor of their empire just to be a part of that, instead of
Mhm.
having to start in, I'm talking about commercial, like, big apartment complexes, instead of starting off doing mortgages, which is tangential to owning a single family house, which is tangential to owning, a 4 unit, which could, so there's all these steps to kind of transition over, which has taken a lot of time. And the guys that have been successful just started off on the deep end with the big deals right away. So and it doesn't have to be big real estate deals if that's not your thing, but figuring out whatever your actual thing that you really want is, and then going for that specifically, and not feeling like you have to start off small, but just start off as a small piece of a big puzzle, and be a part of the system to see how the whole puzzle works instead of just staying in a small bubble.
Love that. Yeah, I think it's just scary to do that. It's scary to think I can jump to the top. But what you're saying is, be a small piece of that, get into that sphere any way you can, whether I mean you're helping people analyze deals, you're helping people do the due diligence, you're part of their process rather than thinking you have to do it all yourself and but it's again, it's mindset, is it
Hmm.
it's easy to comprehend starting with a single family. And there's nothing wrong starting with a single family, but it's easy to comprehend. It's easy to bite off and chew because everybody lives in a single family house.
Yeah.
Uh, so,
Well, and if you are in the world, like if you're when I was doing mortgage loans, I was helping first time home buyers buy $200,000 homes. So you talk to people who have less than $20,000, buy a house worth 200,000. Then you eventually get to people who are buying $800,000 homes. And when you start flipping properties, you talk to people who are close to a million or maybe slightly over a million net worth. Now that I do these syndications, we're doing deals that are between, $2 and $10 million deals. So we're talking to people who have between $1 and $10 million net worths. And
Mm.
I'm trying as hard as I can to get into rooms where people are doing deals between 10 to 100, or, you just keep getting bigger and you be in rooms where people are doing $100 million deals or $1 billion deals. You might spill into a deal where even just some tiny percent of that is flows your way. That can be life-changing money. And then you're aware of the process and you know what you need to do to get bigger and bigger pieces of that.
Yeah, that's awesome. Just get in the game. I think it's
Yeah.
the lesson there.
Yeah.
Um, so Brian, I know we were really just hitting on this, but what are your long-term goals for your investing business? You're at 250 units now. That's way bigger than a lot of people can ever comprehend. Where are you trying to
Mhm.
go?
Yeah, there's, and I've kind of gotten to a crux where I'm making a decision right now about that, right? I think there's a couple paths that I could take. I could continue to raise capital from retail investors, 50 to $200,000 checks at a time, and do some of these bigger syndication deals and grow my team that way. I also have just really enjoyed being nimble and being able to move very quickly and do some of these smaller deals that are like $1 to $3 million deals with maybe 4 or 5 people on a joint venture where everybody puts up, 500K, and you could go in and within 6 to 18 months, you flip a deal pretty quickly and then you get paid. And like I was saying, that first 12 unit that I flipped, it's 2 years, but that's a good paycheck. And that's a lot easier to get that paycheck than having to wait 5 years to get, 8% of a huge deal. So,
Mhm.
so I'm kind of leaning towards being nimble, building my war chest, building my bank account. But then just, I'm a giver. And so if people need help, if I can be a resource, and if I can be a part of something bigger, I'm happy to do that too. But I think focusing on being nimble in the market with these $1 to $3 million deals with a joint venture group is where I'm headed.
So that's interesting. I didn't catch that. I guess that so you bought that 12 unit for, and forgive me if I'm wrong, $800,000 cash.
850. We still got a loan. We put
Okay.
25% down, but I mean,
Okay.
after 2 years, like we're flipping and selling it.
Nice. So you bought it for 850. I'm assuming you raised the 300, or the joint venture came up with the 300 for the rehab.
Yeah, it's just me and my dad. So
Oh,
we
cool.
got, yeah, we were 60/40 partners on it. I had 1031. So I sold one of my duplexes to put my
Cool.
side of the capital into the deal, and he was the liquidity portion.
Mhm.
And so we ended up getting a 75% loan to cost construction loan. So we
Oh,
put
cool.
25% down. We would do like 100K of rehab. The bank would draw us back our 100K. We would do another 100K. They would draw us back another 100K, and then that's how we finished the full amount.
Love that. I should have done that. So I bought, we'll see. I bought my first duplex. I moved out of it. I 1031'd it into a bigger property, and I sold that for a large gain. I invested about half of it into my own deals. I invested about half of it into a passive investment. I really at the time should have just stuck with it and found that bigger deal to 1031 that large chunk of money into. So I think I'm jealous that you're having success with the 12 unit you bought. I bought in the wrong area. I bought 3 sixplexes in not a great area,
Mhm.
and didn't pay enough attention to the due diligence. And I had a great exit, but I had a great exit and didn't have a great transition from that. So um,
Mm.
I'm excited to see how this works out for you. That's awesome.
Yeah, I appreciate it. I'll keep you posted. Ours isn't in a great area either, but we just bought it at such a cheap price.
Is it,
It's
is that in Dallas again?
It's in Dallas. It's by Love Field Airport. Honestly, it's like about a
Okay.
mile and a half from a bunch of strip clubs. But the property, the building itself is okay, and
Yeah.
they're big units, and the rent is still up there. People need a place to live, but
Yeah.
yeah, I'm happy to start moving into better locations.
That's awesome. Well, no, it seems like it's working out well for you. And again, I'm really excited to see what the end result is of that for you. But cool stuff. I love seeing people go from house hacking to bigger multifamily, and you're rolling it like is recommended. So really
Hmm.
cool, man.
Yeah.
Ryan, do you have a book you like to recommend?
It's interesting. There's tons of real estate books out there. I
Hmm.
like
Lots.
listening to a lot of biographies though, because you get to hear how really influential people that are smart did it. And you learn that their journey is just as difficult, if not more stressful and difficult than our journeys, because they're dealing with bigger problems, but that luck and opportunity can come if you're just in the right place and you're in front of the right opportunity. So Jay-Z has a biography that he did,
Really?
and I really like that one because there's lots of points where he's doing things other than just his music career. Like he talks about at one point he was a part owner of a nightclub. Like I'm sure he knows nothing about nightclubs, but
Mm.
other than attending them, but he doesn't know how to run one of those. But he found a good operator that runs a good nightclub. He put some money in and he's part owner. Well, now when he's rapping in his videos, he talks about the 4040 club that he owns in New York so that he tells people to go there. And then that's a cool club. And then the business makes money because he's helping promote it. And then he's an owner. So he makes, well, anyways, and then he bought into a brand of vodka. I forget the brand of vodka, but they sell this vodka in his club that he makes money when he sells his vodka, and so he'll promote on his radio songs, all his nightclub, his so he's like doing all this stuff, and he says, "I'm not a businessman, I'm a businessman," and so like that's just it's a cool way to think that you can have a lot of offshoots that all help support each other, and they can all grow synergistically instead of just beelining straight forward, in one direction. So I thought that was a really cool story.
It's just the Jay-Z's biography.
Yeah, I'm sure they have a better name for it, but yeah, if you look up
Yeah,
Jay-Z biography, I'm sure it'll come up.
awesome. I love biographies too. I'm reading Rockefeller's biography right now. It's called Titan.
Hmm.
Really good book.
Hmm.
It's thick, but it's a great book too.
Yeah.
Um, cool. Well, Ryan, what's the best way for people to get a hold of you and learn more about your company?
Yeah, so depending on when you guys are listening to this, we're currently actually raising money for a deal in Round Rock. So if anybody has any interest in investing in real estate, it's a 506c. So you do have to be an accredited investor, but we're buying 30 brand new townhomes up in Round Rock.
Oh,
So
wow.
yeah, absolutely. So check out our website. That's going to be topproducerinvestmentcapital.com. We've got a
Mhm.
little QR code right here. So if you're watching this, you can scan that and get to the website. So topproducerinvestmentcapital.com. You can learn about all the previous deals that we've done. And then there is request an invitation where you'll get to schedule a call with me. And then, we'll learn about your investing needs and how we can help you make money in real estate.
Awesome. So they're brand new townhomes in Round Rock.
Brand new. So this guy, it's an interesting story. The guy bought a house and he built another, 28. It had a house and a guest house, and he built 28 townhomes around those. And he just finished
Wow.
construction last year. They're 100% occupied. The rents are just really lower than they should be
Mhm.
artificially. So all we're really doing, and I'm excited to own a brand new building. We're
Yeah.
going in and we're buying it at a good price because the guy just needs to diversify and, needs to move on to other things. So we got it off market direct from a broker before it's, hitting the public segment. And he wanted it to go to a good operator. He got higher offers from people in New York and, people that just didn't have good character. And he went with us because he saw the quality of our product. He liked that we took care of the deals that we do. And he knew that we would take good care of his legacy asset here.
Probably
So
doesn't
we got
hurt
it a
you're
good,
local too.
oh yeah, absolutely. Yeah. It took me 20 minutes to get over there. So
Yeah.
yeah, that's a big draw. And yeah, so he built these townhomes. They're, 2-story, 2-bed, 1 bath, 820 square feet.
Nice.
A nice little pocket. There's new developments coming up all around there. So yeah, we're going to go in and not much we can do to really improve the community. It's perfect, kind of just the way that he built
Mhm.
it. But like I said, we'll be good customer service, make sure everyone comes in and feels welcome. But then, we are trying to make a profit, so we'll slowly raise the rents over time to make it just profitable for the investors. And yeah, hopefully passive investors can double their money over the course of 5 years partnering on this deal with us.
That's awesome. That's my favorite kind of value add deal. It's just something where you find the low rents. And I think it helps explain why the rents are low there. The rents are low because he just had to do a lease up. So he's probably doing specials and whatever he can do to fill it up. And he knew he was leasing it out below market, I'm sure. But it's the
Hmm.
opportunity for you to come in and say, hey, over time, like you said, we're providing great customer service. We have a great product, and people expect rents to go up. So over time, your rents are going to go up pretty significantly, I'm sure.
Yeah. Well, and it helps, he may not know where the top of the market is, and he may have an
Mhm.
idea, but we own two properties 10, 15 minutes away from there that
Oh,
we already
cool.
know we're getting 1,800 a month for 2-bedroom units that are not brand new. So, we've got a good push for a case for how these will perform here. So
Mhm.
yeah.
And being in Round Rock too, I think it's interesting. the Austin metro is growing really quickly, but the majority of that growth is happening north and south of Austin. It's happening in Williamson County,
Mm-hmm.
Round Rock, Georgetown, Kyle, Leander, the towns on the edge of Austin. Round Rock, I think, is one of the top 3 school districts in Austin. And it's a
Mm-hmm.
public school district, but it's an amazing school district. People love living up there for that reason.
Mm-hmm.
It's just a great place to be, amazing growth. Like you were talking about the Samsung factory going in up there, there's all sorts of business going around Round Rock or moving into Round Rock.
Mm-hmm.
That's awesome.
Yeah.
Um, Ryan, do you have an Instagram that
I do,
you
yeah. I
live
had
by?
it my company one for a while, but now it's just Ryan Tanel TPIC for Top Producer Investment Capital. So that's RyanTanel TPIC. So you can follow me on there. It's a small account, but because I have a background in video content,
Mhm.
I do enjoy shooting a lot of before and after renovation reels
Oh,
and
cool.
a lot of explaining of like yeah, why is real estate a good investment? When we show you, here is the number of what this is $1,200 a month for rent. This is $1,500 a month for rent. Like
Mhm.
multiply that times 32, you're making an extra, $6 grand a month in rent. That's what we're doing when we do it. So it's easy to see visually how much profit you can make with these deals once we fix them up. So
That's amazing. Love it. And I'm at Jordan_Moorhead on Instagram. We'll have all of Ryan's contact info in the show notes here. Ryan, anything else you want to send us to, we'll get up in the show notes. I appreciate it so much for you coming on here today. And I'm really excited to learn more about this Round Rock project here too.
absolutely. Yeah. Happy to share.
All right. Thank you. Have a great day.
Thanks.